Hey, what's going on out there, everybody out there in the world, ladies and gentlemen, men and women, males and females. Welcome to another video stocking with your boy Profit Peeps, where all the real smart investors win more money, gain more money, earn more money than lose money. Okay, so we at chapter 7, we at lesson 7 when it comes to learning these charts, y'all. This is getting beautiful. I hope y'all done learned something from the last 6 lessons that I provided for y'all and y'all families and people that y'all want to allow to elevate them standards when it comes to investing as well as being trader as well. Okay, so I need y'all to bump and grind against that like button, share the video, subscribe to the channel so the notifications can accelerate. Okay, so I hope everybody having a marvelous day. I hope everybody staying positive and productive, pretty much drug and alcohol free so your mind can be clear. They said you can't get your money right unless you get your mind right. And yeah, that's what we on. Okay, 2022 on up. No drinking, no smoking. It's been 10 years now, me, with no smoking, no marijuana, no cigarettes. Never really did cigarettes, but tried it a few times. Had some Lucy's. But marijuana was my thing. 10 years clean with that. And drinking, no longer doing that as well. We keeping it clean, mind, body, and soul. Okay, moving on forward as the years go on out. Okay, so we're going to get into this next level of charts. Okay, this is lesson 7 right here. I want y'all to tune into the videos that I made, and I'll be back to you. All right, everybody. So what we have here is a bearish one. Okay, you see the long candlestick with 2 wicks, a small wick at the top and a small wick at the bottom. This is considered to be called in neck. Okay, it's a bearish continuation. Overall rating star, a 4-star. Description pattern forms during the downtrend as the bears push the price lower, forming a tall closed candle the next day. The price gaps lower and rallies to close higher than the open and finishes near the previous day close. So this is what you call an in neck. Okay, so also we have here a matching low. All right, so this matching low is a bullish reversal. Overall rating 4-star. Okay, this matching low pattern forms at the end of a downtrend. The first candle of the formation is a tall closed candle followed by another closed candle that finishes at the same time closing price of the previous day. Okay, so that's considered a matching low. All right, we're going to move forward, but as you see, it's pretty much is matching at the bottom. You see the 2 wicks. We got 2 wicks at the top and the bottom, but the middle is more of a body inside the candle, but it's matching at in the middle part. Okay, so that's considered a matching low, which will be bullish. Okay. Now we have meeting lines. Okay, meeting lines is bearish. This is another bearish one. So this is pretty much the opposite of from what we just seen. We just seen here the matching low. So the meeting lines is like overall the top period of the matching low. So now when we meet in lines, this pattern forms at the end of an uptrend. The first candle of the formation is a tall open candle followed by an opening gap higher with a close near the previous day close. All right, so as you see here, this is bearish. This is meeting lines. So this pretty much close more of the top. You have a high wick, a high price rejection at the top, and then it opens up. It closes out and then opens up at the close. Okay, so when it opens up, you see that is meeting the lines, which it will go down. Okay, so pretty much at the bottom it opens and then it closes and then it opens up again on the sellout. Okay, so it opens up again at the sellout at the top. All right, and where we at now? We go into the meeting lines bullish. Okay, so meeting line bullish. From what we have, this pattern pretty much forms at the end of a downtrend. The first candle of the formation is a tall closed candle followed by an opening gap lower with a close near the previous day close. Taller patterns with long bodies or shadows that occur in a neutral or bullish primary trend increases performance all the time. All right. So moving forward, as y'all see. So we have here the morning star. As you see, this pattern description forms at the end of a downtrend. The pattern begins with a closed candle with the price closing lower than the open. The next candle gaps down from the previous candle's close and forms a doji, or may have a small real body spinning top. The third candle in the series gaps above the previous close on the open and must at least close well into the body of the first candle. So we have another on neck. Okay, this is bearish continuation. All right, now we have the morning star, which was bullish. Okay, so that was bullish, the morning star. This is bearish, the on neck, bearish continuation, overall rating a 3-star, as y'all can see. So most of these, if you look at them, the wicks is longer, that the actual candle is longer with each wick at the end. So the wicks is the small little skinny tails. All right, so these is large candles from what we see, which is a power move. Once you see these large candles, they make power moves from those. So this is pretty much a closeout bearish candle right here, which is a on neck. Okay, once again, the pattern forms during a downtrend as the bears push the price lower, forming a tall closed candle. The next day, the price gaps lower and rallies to close higher than the open and finishes near the previous day's low. So we have here the Pearson line. This is bullish. This is a bullish reversal. And this pattern forms at the end of a downtrend. The formation begins with a tall closed candle with the price gapping lower on the next candle open. The second candle is an open real body with a close that finishes above the midpoint of the previous day's body. All right. So that's the Pearson line. As y'all see, you'll see them together in the middle. And this is bullish because you see the next open. You see the next open candle that's green. That's just as tall as the bearish one. So, of course, it's going to accumulate after that. All right. Now we got here the rising window, which is bullish also. All right. This is the rising window, a bullish continuation, overall rating 3-star. And this pattern occurs within an uptrend in the price. The pattern begins with a gap from the previous day's closing price with no overlap in the shadows. Both of the candles in the formation should be open candles, closing higher than the open. As y'all see, this is bullish. Okay, so we have here the separating lines, which is bearish. As you see with a circle at, you got the open and then you got the closing right under it, considered separated lines. So they paying attention to the open green candle, and then it's stopping right at the bottom to open, closing out when everybody's selling off. So that's bearish. Okay, and this pattern occurs with a downtrend. The first candle of the formation is a tall open candle. The next candle gaps down near the previous day's open and continues to sell off, forming a tall closed candle, as you see. All right, so we going to separating lines bullish. Now we have separating lines that's bullish. As you see now is the opposite because the closeout is pretty much small, stopping at the bottom of the open candle, which people are buying in now. So from what we see here, this pattern occurs with an uptrend. The first candle of the formation is a tall closed candle. The next candle gaps up near the previous day's open and continue to trade higher, forming a tall open candle. Okay, so we back now. I hope y'all to learn something once again once and for all. You know, rewind it, play the video back if you didn't understand something. Pay attention very closely to those charts that I've revealed to y'all. That's going to help y'all be bullish and understand when it's going to be bearish. Okay, bullish is very important when you want to invest and you want to know the right time to jump into a stock, rather it's at a support level. When it's at the bearish, when you're looking at, you know when it's going to fall, you know when to snatch your profit and get out of there, or you know when to put a put on your stock to be able to make money on the way down. Okay, as well as knowing that it's going down and then waiting to jump in for when it to go back up. Okay, but I hope everybody learned something. Okay, I'm not going to be long-winded on this. It's pretty simple what we into. I got more videos to come. I got more. We're going to learn about patterns on the next section. Not so much the following other videos, because we still got a few more candlestick charts for y'all to learn. But I hope everybody out there being positive and staying safe, not putting yourself in a position to get harmed or hurt, not in a position to hurt nobody. Okay, stay positive, and if it's negative, run. And that don't mean to be scared. That means be smart. Use your head. Get away from nonsense when you smell it. All right. Winners roll with winners. Leaders roll with leaders. Good followers always follow good leaders to become a good leader. Your boy.